Top 10 Real Estate Underwriting and Deal Screening Agents. Market Snapshot, July 28, 2026. Real estate underwriting agents are moving beyond simple document summarization. The leading platforms can now ingest offering memorandums, rent rolls, trailing 12-month operating statements, leases, comparable sales, borrower packages, and existing Excel models, then produce a first-pass underwriting model, risk review, lender sizing analysis, or investment committee memorandum. The important distinction is that document extraction is not the same as underwriting judgment. A system may extract 99% of fields correctly while still applying the wrong capitalization rate convention, confusing effective rent with contract rent, overlooking a zoning overlay, or failing to reconcile a rent roll against the leases. This comparison therefore evaluates more than speed. It considers document ingestion and financial model construction, comparable sales and rent comparable analysis, geographic information system and zoning data fusion, scenario analysis and sensitivity testing, lender templates and Excel compatibility, source citations and investment committee explainability, publicly reported cycle time and accuracy evidence, data licensing, local regulation, and implementation risk, executive verdict. For the full table, please open this article on AIagentstore.ai. No platform in this list publicly demonstrates a complete nationwide workflow that combines offering memorandum extraction, lease-level validation, parcel-level zoning interpretation, local regulatory monitoring, deterministic financial modeling, and lender-specific document production in one system. In practice, the strongest architecture is still a combination of an underwriting agent, licensed real estate data, a geographic information system provider, and a human review process. How this list was built. The ranking is based on publicly documented product capabilities, not market share or independent customer satisfaction. Several vendors describe themselves as artificial intelligence agents, while others are established deal management or lending platforms adding agentic features. The products fall into four groups. Model building agents. These convert source documents into financial models and returns analyses. Lender underwriting platforms. These focus on loan sizing, credit metrics, stress testing, and underwriting packages. Institutional deal management platforms. These centralize pipeline data, comparable transactions, approvals, and investment committee workflows. Diligence and explainability platforms. These emphasize source citations, conflict detection, lease reconciliation, and audit trails. Comparison table. For the full table, please open this article on AIagentstore.ai. Product capabilities in this table are based on vendor documentation and should be validated with a real sample deal before purchase. Detailed review of the top 10. Archer, best for multifamily teams with a proprietary Excel model. Archer is one of the clearest examples of an underwriting agent designed around the way acquisition teams actually work. Users upload a rent roll and trailing 12-month operating statement, and Archer extracts the information, maps it to the company's chart of accounts, adds comparable rent and expense information, and populates the firm's existing Excel underwriting model. The company describes this as a bring-your-own-model workflow, which preserves the firm's formulas, assumptions, and outputs rather than forcing analysts into a generic template. Archer's public help materials also document multiple models, multiple scenarios, adjustable sensitivity ranges, custom chart of accounts mapping, and portfolio deal support. Its Help Center describes a workflow that can move from property search to a populated Excel model in approximately 10 minutes, although that should be treated as a vendor-reported workflow time rather than an independently verified underwriting benchmark. Strengths. Strong Excel compatibility, useful for multifamily acquisitions, preserves proprietary underwriting logic, explicit scenario and sensitivity support, comparable rent, and expense benchmarking. Weaknesses. Less clearly suited to office, industrial, retail, hospitality, or complex development deals. Public documentation does not establish deep zoning or parcel-level regulatory analysis. Extraction accuracy should be tested on scanned and inconsistent rent rolls. Best buyer. A multifamily acquisition team that already has a trusted Excel model and wants to eliminate manual data entry without changing its investment methodology. Bluma. Best lender-side underwriting and stress testing. Bluma is primarily a commercial real estate lending platform, not an equity acquisition model builder. It supports property and borrower analysis, document parsing, market data, comparable property selection, credit metrics, loan sizing, stress testing, and portfolio monitoring. Bluma reports that its system can parse and spread financial documents in approximately 40 minutes on average, although complex packages may require longer. The company also reports vendor-measured parsing accuracy of approximately 99% and claims that lenders can underwrite deals 3 times faster through automation. These numbers describe Bluma's own product claims and should not be interpreted as independent validation of credit decision accuracy. Its credit analyst workflow is particularly relevant to lenders. Bluma supports high, medium, and low underwriting scenarios, customizable assumptions, multivariable stress test matrices, loan sizing based on loan-to-value, debt service coverage ratio, and debt yield constraints, and export into an in-house or standard underwriting template. Strengths: strong lender orientation, loan sizing and credit metric support, multivariable stress testing, borrower and guarantor analysis, export to internal underwriting templates, market, submarket, and location risk analysis. Weaknesses: less focused on equity waterfalls, promote structures, and investment return modeling. Direct zoning code ingestion is not publicly documented. Exported data may not continue to refresh automatically after transfer into a lender template, according to the help documentation. Best buyer: banks, debt funds, mortgage bankers, insurance companies, and commercial real estate lenders that want automated pre-flight review and standardized credit packages. Framecast: best for source-traced, multi-asset class diligence. Framecast focuses on the data room rather than only the rent roll. It describes ingestion of rent rolls, trailing 12-month statements, leases, offering memorandums, spreadsheets, scanned documents, and other diligence materials. Its most important differentiator is source traceability. Each figure in the model can be linked back to the source document and page. The system also describes cross-checking the rent roll against the underlying leases and flagging discrepancies. That is important because an extracted rent roll may accurately reproduce the broker's spreadsheet while still failing to reflect lease clauses, concessions, renewal options, reimbursements, or outdated tenant information. Framecast appears particularly strong for investment committee explainability because the workflow is organized around the question, where did this number come from? Its public materials describe use across office, industrial, retail, multifamily, lending, asset management, and brokerage workflows. Strengths: broad data room ingestion, lease versus rent roll reconciliation, page-level source links, multi-asset class positioning, access controls and audit trails, strong support for defensible investment committee analysis. Weaknesses: public documentation does not clearly describe lender-specific templates. Geographic information system and zoning capabilities are not publicly detailed. No public independent accuracy benchmark was identified. Best buyer: institutional acquisition, lending, or asset management teams that prioritize auditability and diligence depth over a simple upload and receive a model experience. DealPath AI: best institutional deal screening and portfolio context. DealPath AI is broader than an underwriting agent. It is an institutional investment platform with artificial intelligence features for deal screening, comparable property recommendations, document extraction, property insights, pipeline management, approval workflows, portfolio analysis, and investment committee documentation. Its deal screening workflow supports offering memorandums, rent rolls, trailing 12-month statements, broker opinions of value, pro formas, and related documents. Its comparable property feature can draw from a firm's proprietary database, real capital analytics data, and third-party providers. DealPath reports that its enhanced document extraction tool can process material in under 1 minute with approximately 95% accuracy. That is an extraction claim, not a measure of whether an investment recommendation or valuation is correct. The platform also supports comparison of underwriting models and changing financial scenarios. However, DealPath describes some dedicated underwriting scenario and document generation agents as part of its developing product direction, so buyers should distinguish currently available features from roadmap items. Strengths: strong institutional data foundation, proprietary comparable transaction database, portfolio-aware screening, deal pipeline, approvals, and audit history, strong permissions and governance, useful for firms evaluating hundreds or thousands of opportunities. Weaknesses: not necessarily a replacement for a detailed property-level model, Some agent capabilities are described as in development. Zoning and parcel-level regulatory analysis are not clearly documented. Best buyer: institutional real estate investment managers that need consistent deal intake, screening, historical deal memory, and investment committee workflow, more than a standalone spreadsheet replacement. Altrio Origin: best enterprise deal intake and data standardization. Altrio Origin is aimed at institutional commercial real estate investors. It can extract data from emails, offering memorandums, rent rolls, leases, trailing 12-month statements, and underwriting models, then create structured deal records and score opportunities against a firm's investment criteria. One of Altrio's differentiators is human validation. The company explicitly states that extracted data is reviewed by trained analysts because a nominal 95% accuracy rate is not sufficient for institutional investment decisions. Its platform also supports connected artificial intelligence assistants, Excel workflows, firm-specific permissions, audit logging, and data isolation. Altrio's strongest contribution is likely to be standardization across the opportunity pipeline. It can help ensure that every deal arrives with consistent fields, comparable classifications, screening criteria, and historical context. Its public documentation is less explicit about performing a full property-level discounted cash flow model from raw documents than products such as Archer, Reef, or Framecast. Strengths: strong enterprise workflow, human-in-the-loop data validation, email-to-pipeline automation, proprietary firm data and historical deal context, Excel and model connectivity, governance and audit controls. Weaknesses: full scenario engine detail is not publicly specified. Direct zoning and geographic information system fusion is not documented. May require another modeling engine for complex waterfalls, development budgets, or structured finance. Best buyer: large acquisition teams that need to standardize how deals enter the organization and how analysts, principals, and investment committees access the same underlying data. Reef: best underwrite to investment committee workflow. Reef positions itself as an underwriting and investment committee platform that can process offering memorandums, rent rolls, Argus files, Excel models, broker assumptions, market benchmarks, property tax data, and financial information. Its focus is not simply extracting data. It is connecting intake, underwriting, review, and committee output. The platform is particularly relevant for firms that want to upload an approved internal underwriting template and have the system generate a model using that structure. This is important because investment committees generally care about consistent definitions, internal return hurdles, debt assumptions, and presentation formats rather than a generic artificial intelligence report. Strengths: supports Argus files and Excel models, designed around investment committee output, custom company underwriting templates, broad document coverage, useful bridge between analyst work and committee review. Weaknesses: public materials do not provide an independent accuracy benchmark. Sensitivity and scenario functionality is not documented in as much detail as Archer or Bluma. Geographic information system and zoning capabilities are unclear. Best buyer: real estate private equity firms and investment managers that want to shorten the path from a data room to a familiar model and committee package. Deciph AI: best automated normalization for multifamily private equity. Deciph AI focuses on turning messy property documents into standardized financials. It ingests rent rolls, trailing 12-month operating statements, and offering memorandums, maps financial items to a standard chart of accounts, performs reconciliation checks, and populates a customer's pro forma model. The platform also calculates unit mix, in-place versus effective rent, occupancy, renewals, turnover, delinquency, loss to lease, and trailing 3-month versus trailing 12-month trends. It can flag over-market rents, understated expenses, weak debt service coverage, aggressive exit capitalization rates, and sponsor-related risks. Strengths: strong multifamily rent roll analysis, standardized financial mapping, reconciliation checks, pro forma template population, useful pre-investment risk flags, comparable rent benchmarking. Weaknesses: less clearly suited to complex non-multifamily assets. Zoning and geographic information system fusion not publicly documented. Public scenario analysis detail limited. Best buyer: multifamily acquisition or private equity teams that need repeatable normalization of rent rolls and operating statements before analysts perform deeper underwriting. Serenza: best for lender credit memoranda and firm-specific standards. Serenza is designed around specialist agents that produce accepted deliverables rather than generic chat responses. Its public materials describe rent roll normalization, variance registers, lease and operating statement analysis, credit memoranda, sizing tables, covenant packages, stress matrices, and cited outputs. Its strongest feature is the use of a firm's own prior deals, underwriting standards, and templates as context. The platform states that figures in the resulting memo are linked to source pages, enabling reviewers to verify the conclusion rather than simply trust a generated narrative. Strengths: lender-focused credit memoranda, firm-specific standards and templates, rent roll variance reporting, covenant and stress matrix support, first-linked figures, strong explainability for committee review. Weaknesses: public product maturity and customer scale evidence are limited, broader equity modeling capabilities are not as clearly documented, geographic information system and zoning theory not publicly specified. Best buyer: commercial real estate lenders, private credit funds, and institutional investment teams whose main bottleneck is producing consistent, reviewable credit memoranda from borrower files. UnderwriteX: best speed-oriented multifamily agent. UnderwriteX combines document extraction, underwriting model creation, anomaly detection, comparable rent analysis, scenario modeling, investment memorandum generation, and bidirectional Excel synchronization. It supports offering memorandums, trailing 12-month statements, and rent rolls, and it can monitor email inboxes for new opportunities. The company advertises an initial underwriting time of approximately 30 seconds. Because the platform is positioned as a fast, automated workflow, buyers should pay close attention to how much human validation is required after the first output. Strengths: very fast first-pass underwriting, email to underwriting workflow, anomaly detection, comparable rent analysis, advanced scenarios, bidirectional Excel synchronization. Weaknesses: public independent accuracy evidence is not available, appears most focused on multifamily, zoning, local regulation, and parcel intelligence are not publicly documented. Best buyer: owner-operators, syndicators, and small acquisition teams that need to screen many multifamily deals quickly while retaining Excel as the final review environment. Parcella: best agency debt sizing workflow. Parcella is narrower than the other products, but particularly relevant to lender execution. It describes a workflow in which users upload an offering memorandum or borrower package, provide a rent roll, trailing 12-month statement, and underwritten net cash flow, and then populate a debt sizing model automatically. Its focus is delegated underwriting and agency financing constraints. The company claims that the process can be completed in minutes and that the system reclaims a large share of analyst time. Those claims should be tested against a lender's actual model, including hidden tabs, validation rules, funding assumptions, and required exception documentation. Strengths: strong lender orientation, agency debt sizing, borrower package ingestion, template-based model population, useful for repetitive financing workflows. Weaknesses: narrower than a general investment underwriting platform, less useful for equity waterfalls and development underwriting. Geographic information system and zoning capabilities are not publicly documented. Best buyer: agency lenders, mortgage banking teams, and borrowers repeatedly preparing standardized debt sizing packages. Benchmarking underwriting cycle time. Publicly available cycle time data is fragmented. Vendors often measure different things: time to extract fields, time to create a first-pass model, time to produce a lender package, time to complete human review, time to reach an investment committee decision. These are not interchangeable. Publicly reported cycle time signals. For the full table, please open this article on AIagentstore.ai. The public benchmark from RentRoll IQ is more transparent than most vendor claims because it publishes its fixture count, asset classes, validation checks, and known defects. However, it is still a vendor-produced benchmark with a small sample and should not be treated as an industry standard. The correct cycle time benchmark: a buyer should measure at least 4 timestamps. Package received to first structured data. Package received to first pass model. Package received to reviewed model. Reviewed model to investment committee ready memorandum. The third metric is usually the most important. A system that produces a model in 30 seconds but requires 2 hours of manual checking may not outperform a system that produces a reviewable model in 20 minutes. Accuracy versus a human baseline. The market currently lacks a credible, independent, apples-to-apples benchmark comparing artificial intelligence underwriting agents with senior real estate underwriters. Most public accuracy claims measure field extraction, not correct normalization of income and expenses, correct treatment of concessions and loss to lease, correct debt sizing, correct capitalization rate basis, correct waterfall calculations, correct zoning interpretation, correct investment recommendation, accuracy of projected returns after the property operates. For example, Bluma reports approximately 99% accuracy in document parsing, while DealPath reports approximately 95% extraction accuracy for its enhanced extraction tool. Those figures may be useful for screening vendor quality, but neither proves that the final underwriting conclusion is correct. Research on large language models in real estate also suggests that general reasoning, memory, hallucination control, and domain-specific decision-making remain material limitations. A dedicated evaluation of housing transaction capabilities found significant room for improvement before large language models can be treated as reliable real estate agents. Recommended accuracy test. Use a minimum of 30 real deal packages across multifamily, office, retail, industrial, mixed use, different document formats, scanned and machine-readable files, at least several states and local jurisdictions. Create a human-verified reference model and compare unit count, occupancy, scheduled rent, effective rent, expense line items, net operating income, entry capitalization rate, loan amount, debt service coverage ratio, debt yield, levered internal rate of return, equity multiple, exit value, investment recommendation, source page citation accuracy. The most useful metric is not merely average field accuracy, it is the percentage of deals that reach a correct decision without an analyst discovering a material error. Sensitivity analysis quality. Sensitivity analysis is where many artificial intelligence underwriting tools become superficial. A few sliders do not necessarily constitute institutional-grade scenario modeling. A practical sensitivity quality scale. Level 1. Single variable sliders. The user changes one assumption, such as rent growth or interest rate, and sees the return metrics update. Useful for quick screening, but weak for investment committee analysis. Level 2. Static base, downside, and upside cases. The system creates several cases with predefined assumptions. Better, but still vulnerable if the relationships between assumptions are not explicit. Level 3. Linked multivariable scenarios. The system simultaneously changes rent growth, vacancy, operating expenses, capital expenditures, interest rate, loan to value, exit capitalization rate, hold period, lease-up timing. This is the minimum standard for serious acquisition or lending analysis. Level 4. Break-even and probabilistic analysis. The system shows break-even purchase price, break-even rent, maximum loan amount under multiple constraints, probability of falling below debt service coverage requirements, distribution of internal rates of return, correlation between assumptions, downside exposure under correlated shocks. Very few public product descriptions demonstrate this level consistently. Publicly evidenced sensitivity capability Archer. Strong. Its documentation describes multiple models, scenarios, and adjustable sensitivity ranges. Bluma. Strong for lending. It documents high, medium, and low cases, customizable assumptions, multivariable stress tests, and loan sizing. UnderwriteX. Strong public positioning around advanced scenario modeling. DealPath AI. Moderate. Model comparison is available, while dedicated bull, base, and bear scenario agents are described as a developing capability. Parcella. Stronger for debt constraints than for broad equity return sensitivities. Framecast, Reef, Deciph, Altrio, and Syrenza. The public materials emphasize extraction, review, memo generation, or workflow governance, more than detailed sensitivity engine design. Map and Geographic Information System data fusion. This is the largest gap in the current market. Most underwriting agents can use an address to obtain market context or comparable properties. Far fewer can reliably connect the correct parcel and parcel identifier, current zoning district, permitted uses, density and floor area ratio limits, height and setback requirements, parking requirements, overlay districts, flood, environmental and infrastructure constraints, pending zoning changes, a development scenario that flows into the financial model. Leading Geographic Information System data complements. Lightbox offers parcel, building, ownership, transaction, environmental, market, and zoning data connected through a persistent property identifier. Its zoning data includes classifications, permitted uses, setbacks, floor area ratios, and building height information. And it provides application programming interface access. Zonomics provides zoning and land use data, zoning reports, permitted use searches, parcel filters, and application programming interfaces. It reports coverage across more than 23,500 cities and more than 100 million lots, although buyers should validate coverage and update timing in their target markets. Gridix converts zoning code text into parcel-level data and uses a rules engine to visualize development potential, permitted uses, setbacks, overlays, density, and related attributes. Why zoning cannot be treated as a simple lookup? Zoning is locally administered, and the authoritative answer may depend on municipal or county code, zoning maps, overlay districts, conditional use approvals, variances, existing legal nonconforming status, building code requirements, historic preservation rules, environmental constraints, recent but not yet digitized amendments. A municipal geographic information system layer may not contain every current map or ordinance, and update frequency varies by local government. Lender requirements reinforce the need for jurisdiction-specific verification. Fannie Mae requires reporting of the specific zoning class, permitted use, and whether the property is legally conforming, legally nonconforming, illegal, or located in an area without local zoning. Its multifamily guide also requires analysis of density, building height, setbacks, and related characteristics. Practical conclusion: an underwriting agent should treat zoning as a verified diligence item, not an automatically trusted model assumption. Data licensing and ownership. Real estate underwriting agents often combine customer documents with licensed third-party data. This creates a major commercial and legal risk. Comparable transactions and market data. CoStar's terms grant a limited, non-exclusive, non-transferable license and restrict certain uses of its information after termination. TREP's terms similarly emphasize internal business use and restrict redistribution, repackaging, and use in competing products. This matters when a vendor claims it can build a proprietary comparable database, train an artificial intelligence model on market data, redistribute comparable details in investment committee memoranda, provide market data to clients, store historical data after a subscription ends, or create derived scores that may be viewed as a competing data product. The license must explicitly address each use. Multiple listing service data. Multiple listing service rights are governed by specific feed agreements and policy requirements. National Association of Realtors policy permits certain reproduction and distribution of listing information in limited circumstances, but that does not automatically grant a software company the right to store, train on, redistribute, or commercially resell the underlying data. Geographic and zoning data. Lightbox's application terms describe a limited, non-transferable, non-sublicensable license for its data and tools. Similar restrictions may apply to zoning, parcel, environmental, demographic, and mapping data. Contract terms every buyer should review. Before uploading live deal packages, require clear answers on whether customer documents are used to train shared models, data retention period, deletion after account termination, subprocessors and model providers, human review access, encryption and access controls, private cloud or virtual private cloud deployment, rights to export the firm's structured data, rights to retain investment committee memoranda, treatment of licensed comparable data in exported reports, whether derived scores may be used outside the platform, audit logs and incident notification, vendor statements such as data is not used for training should be reflected in the contract, not accepted solely from marketing material. Explainability for investment committee memoranda. A polished memorandum is not necessarily an explainable memorandum. A strong system should distinguish 4 layers. Source facts. Examples: asking price from page 4 of the offering memorandum, unit count from the rent roll, insurance expense from the trailing 12-month statement, lease expiration from the lease abstract, zoning classification from the official municipal source, underwriter assumptions. Examples: market rent growth, vacancy, expense normalization, exit capitalization rate, renovation schedule, lease-up timing, financing rate, deterministic model calculations. Examples: net operating income, debt service, loan proceeds, cash flow, internal rate of return, equity multiple, sensitivity outputs, artificial intelligence narrative. Examples: the broker's rent growth assumption appears aggressive. Insurance expense is below comparable properties. The property may be legally non-conforming. The deal fails the investment committee's downside return hurdle. The first 3 layers should be independently reviewable. The 4th should never be allowed to obscure the underlying evidence. Platforms such as Framecast, Sirenza, Cactus, Altrio, and DealPath emphasize source links, firm memory, audit logging, permissions, or reviewer controls. These features are more valuable than a fluent narrative because they allow a committee member to challenge the conclusion. Minimum Investment Committee Evidence Standard. Every material number in an investment committee memorandum should have source document, page, row, cell, or lease clause, extraction confidence, date of the source, analyst override, if any, reason for the override, model version, reviewer identity, scenario name, unresolved conflict status, market data license status. The system should also show what changed since the previous version. A committee needs to know whether returns changed because the purchase price changed, the debt terms changed, the rent roll interpretation changed, or the analyst simply updated an assumption. What buyers should select. Choose Archer when multifamily is the primary asset class. The firm already has a trusted Excel model. Comparable rent and expense analysis matter. Analysts need speed without abandoning Excel. Choose Bluma when the primary user is a lender. Loan sizing and stress testing are central. Borrower and guarantor data must be reviewed. The firm needs standard lender outputs. Choose Framecast or Syrenza when source traceability is more important than raw speed. Lease level diligence matters. The investment committee or credit committee demands evidence. The firm wants cited memoranda rather than uncited artificial intelligence summaries. Choose DealPath or Altrio when the biggest problem is fragmented deal flow. The firm needs a centralized proprietary transaction database. Many investment professionals must share the same deal history. Governance, permissions, routing, and approvals matter. Choose Reef or DeCipher when the firm wants a repeatable path from source documents to its own model. Standardized financial normalization is a major bottleneck. Investment committee materials must remain consistent. Choose UnderwriteX or Parcella when speed is critical. The team has a narrower multifamily or lending workflow. Scenario modeling or agency debt sizing is the primary need. Excel export remains mandatory. The solution the market still needs. The strongest entrepreneurial opportunity is a jurisdiction-aware underwriting operating system that combines the best features of these products without forcing firms to assemble a fragile collection of disconnected tools. A better solution would include multimodal document ingestion. Read offering memorandums, leases, rent rolls, financial statements, zoning documents, surveys, environmental reports, and lender forms. Property identity resolution. Match the address, parcel identifier, building, ownership entity, and operating entity across every document. Zoning and entitlement graph. Connect current zoning, permitted uses, overlays, conditional uses, variances, density, setbacks, parking, and effective dates to the property record. License data controls. Track which comparable, demographic, mapping, and credit data fields can be stored, exported, or included in a client memorandum. Deterministic financial engine. Use artificial intelligence for extraction and reasoning, but calculate financial outputs through controlled, testable formulas. Lender template compiler. Populate approved bank, agency, debt fund, and internal Excel templates while preserving formulas, hidden tabs, validation checks, and version history. Scenario and break-even engine. Support linked downside cases, lender constraints, rent growth shocks, interest rate changes, exit capitalization rate changes, lease-up delays, and probabilistic analysis. Evidence graph for investment committees. Link every memo statement to a source, assumption, calculation, reviewer, date, and model version. Local regulation monitoring. Alert users when zoning codes, rent regulations, tax rules, parking requirements, building codes, or environmental layers change. Independent benchmarking. Publish accuracy and error results on real deal packages, including failures, rather than reporting only successful extraction rates. The market gap is not another chatbot that summarizes a property. The gap is a reviewable, source-backed, regulation-aware, lender-compatible underwriting system that can be trusted when the investment committee asks, "Show me exactly why this number is in the model." Conclusion. Real estate underwriting agents are already capable of reducing the mechanical work involved in screening deals. The best systems can transform a rent roll, trailing 12-month statement, offering memorandum, or borrower package into structured data and a usable first-pass model in minutes rather than hours. However, the most important capabilities are not the fastest extraction time or the most confident artificial intelligence recommendation. They are reconciliation across conflicting documents, compatibility with the firm's existing model, properly linked sensitivity analysis, lender-specific outputs, parcel-level and jurisdiction-specific diligence, clear data licensing rights, source citations, and human approval, a defensible audit trail for the investment committee. For most firms, the right deployment model is human-supervised automation. Use the agent to collect, normalize, compare, stress test, and draft. Keep the final investment judgment, zoning confirmation, material assumption approval, and lender submission under accountable human control. All links to sources are available in the text version of this article. You can find the full article at aiagentstore.ai/agentic AI and workflow automation. Thanks for listening. And thanks for rating the show. Visit aiagentstore.ai to discover agents, tools, and setup files that help you work faster and automate more. You'll also find Claw Earn, our job marketplace where AI agents and humans can both work and create tasks, plus marketing solutions for AI product founders. Explore it all at aiagentstore.ai.